Let's go ahead and get started. Good evening, everyone. Thank you all so much for joining us tonight. On behalf of Build Up Justice NYC and Grow Brooklyn, we truly appreciate you taking the time to join us this evening. I know tax season can be stressful, it can be a confusing time of the year. So tonight, we're going to be demystifying parts of that tax filing process and make sure that you have the information you need to file your taxes accurately and with confidence. Tonight is the last session of our three-part series, and we're going to be focusing on self-employment and avoiding tax problems. We'll review important terms and share information on what you can do if you find yourself with a tax problem. We'll also share resources where you can obtain trusted support and services. So for those who may be joining us for the first time, my name is Teresa Shire, and I'm the Grant Writer and Development Coordinator at Build Up Justice NYC. Build Up Justice NYC, formerly known as Brooklyn Legal Services Corporation A, provides free, community-centered civil legal services to low-income New Yorkers across all 5 boroughs. And while our name has changed, our mission remains the same, to advance economic and racial justice by preserving stability and long-term security for tenants, homeowners, small business owners, and families. Our work spans 3 core programs. Our Preserving Affordable Housing program helps tenants stay in their homes through eviction prevention, anti-harassment advocacy, fair housing claims, and access to essential services. Our Community Economic Development program supports small businesses and nonprofits. We provide commercial lease assistance, advice on laws and options, negotiating rent and arrears, and anti-harassment advocacy for commercial tenants. And our Consumer and Economic Advocacy program helps individuals and families build financial stability. This includes preventing foreclosures, resolving tax issues, and offering wills and estates planning. Under this program, we also have a domestic violence team that assists with obtaining orders of protection, child custody, and support. And tonight's program is part of our consumer and economic advocacy work. We're also proud to partner with Grow Brooklyn. They are a community-based organization dedicated to strengthening Brooklyn residents through financial empowerment and housing stability. Grow Brooklyn provides free services, including housing counseling, foreclosure prevention support, homebuyer education, financial coaching, assistance navigating mortgage and property tax challenges, and more. Their work helps community members grow and preserve their assets, helping to build economic security. And we're especially excited to be joined by a representative from the Internal Revenue Service tonight, who's here to provide accurate information and help answer your questions directly. And before we begin, we'd like to take a moment and sincerely thank all of our sponsors and partners who helped make tonight's program possible. Their commitment to education, outreach, and community empowerment makes events like this accessible to those who need them most. So a huge thank you to Senator Roxanne J. Prasad, Senator Leroy Comrie, Assemblymember Lorinda C. Hooks, and New York City Council Deputy Speaker Dr. Natasha Williams for their partnership. It is now my pleasure to introduce Max B. Trezel, Senior Stakeholder Liaison with the Internal Revenue Service. Max brings over 20 years of experience in education, public service, and federal government. Throughout his career, from the New York City Department of Education to the U.S. Census Bureau during the 2020 decennial census, and now with the IRS, he has focused on strengthening community partnerships and expanding access to economic opportunity. In his current role as Senior Stakeholder Liaison for the New York area, Max works closely with community organizations, employers, and tax professionals to provide outreach, education, and trusted information directly to taxpayers. He is fluent in multiple languages and deeply committed to ensuring communities receive accurate, accessible information from the IRS. Max, thank you for being with us tonight. We're so grateful that you're here to share your expertise with our audience. I'll turn it over to you now.
All right, good evening, good afternoon, or wherever you are. So my name is Max B. Chisel, like you can hear, you can see. So today, it's another pleasure for me to be here as the last day of the event, and thank you, Building Justice, for being a good partner with the IRS. As you know, the stakeholder liaison looking for partner to share informations and leverage those informations, what we share with people and collecting feedbacks regarding our tools and our services. As you know, today I was supposed to talk about the self-directed services, but for some reasons we decided to change the format a little bit. As you know, last year we had a lot of outreach about direct filing. So we use the direct filings about 25 states, and there were 300,000 customer or taxpayer that use our system. But the new administration, when it's come over and decided they want to stop it. And what was the reason behind that? Is because they think there's many ways people can file their tax for free. It's a waste of money because obviously we have a lot of partners that people have to file their taxes, and for them it makes sense for them to discontinue the program. And what we want to talk about today again is one of the things that there's an executive order called 14247, modernizing payment to and from America's banking. And this executive order has created a little bit of reflections or a little bit of problem because a lot of people don't have a bank account, and some of them it may be because they're unable to have a bank account, or they choose not to have one, or they don't know how to do it, and or maybe this is not something that they need. And this executive order was signed on March 25, 2020, and was effective as of September 30, 2025. And right now, this executive order is a treasury policy, it's not just IS policy. Every payment that's going to come out from the US government must be paying in electronics. So no paper check. But there's some informations are being changed. So I can share with you where we are right now. IRS is asking or changing the business tax return form to include field for direct deposit informations. And right now we are communicating with the partners and via press release and via FAQs, content in irs.gov, and more to keep the public update about moving, the taxes on start January 26th. So we still have questions that people are asking that we don't have the complete answer for that. But moving forward, we try to leverage the tax industry software provider and tax practitioners to amplify the messages on what to expect. Partnering with Bureau of Fiscal Services on new update tools for diverse demographic and IRS customers. And from IRS, the office that I work for, now, I was expanding refund option for customers. Direct deposit to check and saving account. Use on reloadable debit account and use account associated with digital payment. That's what we are focusing now. And if you haven't get your checking account or your saving account to do your taxes, you might have a little bit problem wanting or doing your tax to be processed. And if we go to next, what are the changes as of January 2026? As we mentioned before, business individuals should provide direct deposit information when the tax are filed. When you see below the slice, the taxpayer will receive a notice requesting bank account information, or a reason is cannot be provided within 10 years. Right. What does that mean? When you do your tax, you are obligated to provide your online account or your banking account to do your tax electronically. If the banking information is missing when you file in your tax can still be in process. But they will request you, they will send you a notice, acknowledge you that you need to send your banking information within 30 days. All right. And if you go to Where's My Refund, Where's My Refund tools, that will provide you a message that said the need for banking information. The taxpayer can use the individual account to provide the information. That's why the online account is very, very important, because you can use your online account to edit or to insert your bank account. In between the 30 days when your tax can be processed without the banking information. I want to make sure that you get that. And when the tax is being processed, they will send you a CP, I believe a CPE 53. In the CP 53, they will explain to you to provide the reason why you don't have your banking information, or you ask you to update the banking information. All right? A tax refund will be held, that's what I'm going to say, up for 6 weeks. After the 30 days, if you don't provide the banking information, IRS will keep your tax up to 6 weeks when the tax return is processed in our system. After the tax being processed, they're going to hold it for 6 weeks. On the tax payer provide the direct deposit information or exception. The exception why they cannot have a bank account. The refund will be immediately released via depot or paper check after 6 weeks. I wanna repeat that. After 6 weeks, the refund will be released as a paper check. If there is no other issues for the tax return, individual account will be expanded to capture the banking information or reason for an exception for those receiving a notice. That's the key. That's the underlying information here. They will send you if your taxes, you doing your tax return without your banking information, if the tax can be processed, but at the end they will send you a notice within 30 days to update the information. If the information is not being updated properly, or the bank is rejecting your informations, you probably got your tax or your refund after 6 weeks on a paper check. IRS will have a phone extension for taxpayer to provide an exception. If individual account is not an option for you, please call the customer service. Keep in mind, the customer service cannot provide direct information over the phone because of the PII. All right, let's move on. There's multiple options for individual taxpayer to receive direct deposit. IRS is partner with Get Banking, My Credit Union, .gov. Those kind of entity that you can click is a link. You can see where some options that if you want to open a bank account. Many of the tax software company and practitioners offer reloadable, reloadable debit account, sorry, that may be an option for some taxpayers. What is the future? As of the future is beyond the tax season, there are opportunity to have a similar process for those individuals filing amended tax return. All right? Improve and work around international refund and access to the digital payment. Incorporate any learning from 2026 to improve the experience expanded direct deposit activity from further 2027. Possible update guidance on the summer 2026. And stay tuned. Like I always say, go to irs.gov to search or to get the more accurate and updated information published by the IRS. All right. So if there is something that you need to learn, that the having a bank account to do your tax is something that crucial. It's something that more important because I feel like if you have a refund, you really need your money. And when they mean that when they said 30 days, and 30 days in the government is not, it can take more than that. And after that, you will have to stay 6 weeks to get your refund. And I will advise if you know somebody and partner, please have your bank account or get some talk to somebody to help you get a bank account to do your tax, or so that your tax will be processed on time and you can get your refund on time. And as you can see, this is very important for us as a stakeholder liaison. So this is the Eastern Corridor from Delaware, Massachusetts, Connecticut, Maryland, Maine, New York, New Jersey, Pennsylvania, Rhode Island. This is the number you can call if you have an issue with the IRS, with some affiliate, with something that affiliate to IRS. You can call. Even though if you have a question, you don't have the answer, call or email us at cl.sl area2@ios.gov. Those emails I receive them every day. If you something happened to you and some because Me, personally, I may not have the answer, but somebody in iOS will have the answer. This is our job to make the process easy for you. That's why we hired to do this job and make sure you don't need to be worried. Just we are the bridge in between you and iOS. Just call or leave us a message and or send an email. Somebody within 2 hours or three will reach out back to you. Okay? And as you know, my name is Max B. Chazal, and my email is maxbchazal@ios.gov. And this is my phone number. One of them is a cell phone, and the other one is an office number. So you can reach out to me anytime. Make sure if you have any feedbacks, or even the feedbacks doesn't have to be exactly from iOS, the service you provide related to iOS, please send it to us so that we can make change in the system. Thank you very much for the opportunity. And hopefully, if you have a question, I'm still here. I can answer the question.
Thank you, Max. Really great info. Thank you for keeping us updated on what's new this year. Before I turn it over to Grow Brooklyn, just a few quick housekeeping notes. Tonight's recording will be shared, as well as a document of all the resources that we'll talk about today and all of our contact information. You can expect to send that over sometime next week. We're also going to have a Q&A session at the end of the program, so please feel free to type your questions into the Q&A box that you see on your screen at any time. When we open the floor, you can also use your hand raise feature if you'd like to ask your question verbally. And we'll do our best to answer as many questions as possible this evening, but if we are unable to get to your question, we will provide contact information so that you can follow up. So with that, I'm very happy to introduce Executive Director Makila Brathwaite and Taxpayer Experience Rep Takia Smart from Grow Brooklyn, who will kick things off for us.
Good evening, everyone. I am Takia Smart, taxpayer experience person, and I will be doing this set of our slides. We're going to dive right into self-employment and what that is. How do we define self-employment? So, how are self-employment individuals different from employees? A self-employed individual is someone who works for themselves rather than an employer. They operate their own business or engage in freelance work and manage how and when they do their work. An employee is a person who works for an employer in exchange for a set salary. An employee's job duties, their work hours, and their compensation are usually set by the terms of their employers. Next. Then we come down to defining when people work for themselves. When is it considered a business versus a hobby? When you have a business is something that your primary goal is income. So it is very income driven. As a result, you have to keep good records, you market services, and you do things to grow your income. When you have a hobby, a lot of times it's something that's not necessarily pursued with the main goal being a financial gain. It is something that you do in your free time and you do it leisurely. So even if you make something from it, it is not, you're not trying to make this your primary resource for taking care of yourself. Um, and then the biggest difference tax-wise is that you will not claim this income if you're doing a hobby, and you cannot deduct the expenses for the materials that you use to further your hobby. Next. The IRS does look into how you carry out this business to make profit, and there isn't a single factor in deciding. The IRS usually looks at all the facts together. For example, if someone is selling handmade items, occasionally at a craft fair, it may be considered a hobby. But someone who's selling those items regularly and tracking their expenses and marketing their products will most likely be considered to running a business. It's important as a self-employed worker to know that even if you think something is just a side hustle, the IRS may still consider that to be a business if you're trying to make money. And that means that that income must be reported and subject to business taxes. Next slide, please. Okay, so when self-reporting your income, self-reporting individuals usually have to file something called Schedule C, is what you'll hear, right? This is your profit and loss statement. On that statement, you will report the total income you received doing this job. You would report your business expenses. And the math between those will then give you what your net income is, right? When you do the subtraction. So basically, you'll be subtracting business expenses from your total income to get your net profit. Next slide, please. One of the another difference between self-employed versus employees is that when you get a job and you have paperwork to fill out, there is a form that you fill out with your employer called a W-4. And your W-4 lets your employer know your filing status and whatnot so that they will file this for that when they are paying you, they will then take out taxes accordingly, right? Based on your income, based on your filing status, and if you have a pension with them, all of those things, right? But this is about the taxes this is the federal side for your taxes, and your taxes is based on your filing status. So this is what you fill out when you have an employer. Um, Next one, please. So business expenses. Business expenses have to be directly tied to your business. And this may seem obvious, but there are some parts of people's business expenses that could become a little confusing, right? So some straightforward things are clearly if you're an Uber driver, your your mileage, are you washing the car, the amount of phone use, maybe the amount for the phone, portion of your phone bill. All of these things can be deducted as business expenses because without these things, you cannot properly operate your job. Same thing if you're a hairstylist, right? Your hair products, your gloves, your booth rental, your marketing. Um, and Etsy sellers, like with the example given before with jewelry makers or crafters and stuff, the materials that go into making those items, shipping costs for when people are ordering those items, packaging costs, web fees that you would incur from using these platforms to sell your items. And of course, we talked earlier in the example, they talked about going to fairs. Sometimes there's a cost for going to those things. That's part of your marketing cost that you go and you pay for your tabling and you pay for your spot for the day and things like that. Next. One of the responsibilities when you're self-employed is a self-employment tax. And how that self-employment tax actually works is that it's a certain percentage of your income, and on the federal side, half of that they actually give you that back as a deduction, but you are required to pay a self-employment tax. Also, you still have to pay your normal income tax, your Social Security contribution, as well as your Medicaid contribution. The difference where you diverge as an employee versus being self-employed is that Social Security and Medicaid, usually half of that is contributed for you on behalf of your employer when you are employed by someone else and you're receiving that W-2 at the end of the year. And when you are self-employed, you're required to pay the full amount, which means that at the very least, you'll always have at least 15% of your income that you have to pay in taxes when you are self-employed. And that's because your Social Security amount is about 12 point something percent, and then the Medicaid is like 3 point something percent, and you're responsible for that full 15 and change percent. If you had an employer, they are paying half of that on your behalf. Okay? Also, when you are self-employed, because a lot of your income is all cash, right? There's no taxes being taken out. You're required, or it's strongly suggested that you pay taxes quarterly. Um, these are the suggested months: April, June, September, January, but you just need to get them paid. Uh, anytime you owe at the end of the year taxes for more than $1,000 at the end of the tax year, you would receive penalty. So in addition, even if you file on time, right? So in addition to owing the money that you owe, most often you would get a letter also letting you know that there are penalties because you continuously owe and you do not pay your taxes. Next. So what are some mistakes that you might run into as a self-employed person? Um, if this is something that you're just doing for fun, you don't pay quarterly payments. A lot of people really and truly do not pay these quarterly payments. Think of it as a side hustle, especially people who just kind of do maybe DoorDash when they get off work a couple hours here and there, and they don't make a lot, and they think it doesn't count, right? And you're not properly tracking the income that you have so that you can properly report at the end of the year. Um, the issues with some of these is that depending on how you're doing your side job, you may be working for someone else, right? So a lot of times, if you're doing some sort of freelance work for a particular company, they are keeping track of their income as well, right? And part of their expenses is your income. So they will be reporting that to the IRS. This is what happens when you do DoorDash and Lyft and all of these sorts of things. And what will be issued at the end of the year is a 1099 NEC form. Oh, I just had a brain fart there. Sorry. Um, you're not an employee with them, is what happens, right? So you get this 1099, which means this income was reported to have been paid to you to the IRS. So the IRS knows that you received this $1,500, it might be, for the year. You must still report it with your regular income if it's just a side hustle and you have a job where you've received a W-2. Your failure to do that could result in a penalty because you could have owed money to the IRS or to your respective state. Next. Workers, the classification of workers, an employee versus independent contractor. This goes back to what I was talking to just now. The independent contractor is someone who is hired that's not part of that company's staff, right? So being part of that company's budget, meaning that they're paying you, is not the same as being their staff. When you are an employee of them, you receive W-2s. They then withhold those taxes for you, and they control your schedule a little tighter than when you are a contract worker, right? Usually, when you're a contract worker, you get paid whatever your income is straight up without taxes being taken out. This is why you receive the 1099. You negotiate how, when, where, why the work is being done, versus an employee. And those are the main differences between you being a freelancer, an independent contractor versus being an employee. Next slide, please. So why is it important to even talk about this classification, right? Because of course they know you're not their employee, you know you're not their employee. Well, the reason is important to know is, as I mentioned before, if you are an employee, they're responsible for certain things. One of the things they're responsible for, in addition to the paying part of your Social Security and Medicaid, actually is to pay into unemployment taxes on your behalf, so that in the event in the future you become unemployed and you need to draw on unemployment, they should have paid into that on your behalf. When you are not their employee, they don't do this. Also, if you were working for someone and you've made $50,000 and you thought you were an employee at the end of the year, now you owe taxes on $50,000 outright, and they did not appropriately classify you, you do have some sort of, you could go to the IRS to get this situation rectified, right? So it is important to be very clear when you're working for someone. How are you considered? What your contract is? How are they paying you? Why they're paying you in the way they're paying you, right? So there've been people at the end of the year who thought they were employees, then come to find out, no, you were not. They were issued 1099 forms, right? And don't be afraid to speak up. Reach out to any one of the entities who's speaking to you today to get assistance on something like that, because they have now avoided paying their part of what they're supposed to pay to have an employee. Next, tax deadlines. Tax deadlines are important for everyone, but they are especially so for those of us who owe taxes, because this is the group of us who will get into issues, financial penalties if we do not file on time. April 15th is usually your deadline. If you know that you can't, let's say you haven't gathered all your paperwork or whatever to file by the 15th, you could file for an extension. The government gives you 6 months of an extension for the current tax year only, and that extension then takes you to October. It does not resolve you from having to pay interest on what you owe starting on the 16th of April till the day you finally file and pay. The only thing it does is that it gives you more time to file, that you do not get a late fee penalty for filing your tax return late once you file within the deadline. And again, this is only for the current tax year, right? Now, there are situations that change these dates for certain individuals, and that's for if you were in an area that suffered a natural disaster. So for that particular time, you may find that your filing deadline was changed, which means your extension date will also be different as a result. You would have had to register with FEMA. This has to be an actual federally sanctioned scenario, not just your house flooded and that happened to you. It has to be a whole area where something has been nationally recognized. You would actually need that number from FEMA. There's a case number, what I forgot what it's actually called, that you would need to have in order to file your tax return at that time. But for everyone, all things being okay, April and October are the dates you're looking at, and you do not want to miss these dates because of penalties that you would incur. Thank you.
Yes. Good evening, everybody. My name's Charles Healy. I'm with Build Up Justice NYC. Thank you so much to Kia for the information that you were just providing. Um, Also, thank you to Max, Senator Persaud, Senator Comrie, Assemblymember Hooks, and New York City Council Deputy Speaker Williams for sponsoring this event. Um, so first first I'm an attorney with the Low Income Taxpayer Clinic at Build Up Justice NYC. The first thing that we'll talk about here are your rights as a taxpayer. So as a taxpayer, you do have rights. Um, the first is you have the right to be informed. This relates to being informed about what your taxes are going to be, and so you can appropriately plan going forward, and also taxes that you have a right to understand why you were having to pay a certain tax that you may have a question about. Receiving quality service, you have a right to pay only what you legally owe and not anything more. You have a right to challenge the IRS if you disagree with their determination. There are going to be deadlines for certain challenges that you'd like to bring, but you do have the right to challenge. You have the right to appeal a decision if you disagree with that decision. I think we can go to the next slide. You have a right to privacy, so the IRS cannot just share your tax information with anybody. That's private information. The same confidentiality relates to that. You have a right to representation. So That doesn't necessarily mean that you'll always be able to obtain a lawyer, but if you can obtain a lawyer, you have a right to have that lawyer speak on your behalf. But one of the jobs that we have here is to make legal representation widely available. So we really hope everyone who needs a lawyer can obtain that. You have a right to a final resolution of your case, meaning that the case doesn't can't just be going on and on for the rest of your life. There should be an end to that, and you have a right to fair and just tax system. So these are all available on the IRS's website, for you to further review. So is a lot of the other stuff that I'm going to be going over here today. Okay, so as Takia was just explaining, there are a lot of different rules and concepts that go into self-employment tax. And she really covered a lot of great subjects, and she did a very good job of that. Um, One thing I wanted to talk about is why there is a self-employment tax. And Takia spoke about this earlier, but just to reiterate, this is a tax on your income, but it's treated differently than a tax on your wage income. So, as a self-employed person, you're then both an employer and an employee. So, you're basically wearing both hats, so to speak, even though you're just one person. You'll be paying, if you're a self-employed person, the Social Security and Medicare tax that an employer would otherwise have paid if you had earned this money through an employment relationship. Um, you will have an opportunity on your tax return to deduct 50% of that self-employment tax from your total taxable income for the same year. So this can get a little fine-grained and can get a little bit technical. There are multiple forms that are used, including, as Takia mentioned, the Schedule C. There's a Schedule SE, a Schedule 1, and then those are all going to be connecting to your top form, which is the 1040. So if you have any doubts about how to prepare taxes, it's really recommended that a professional do it for you in order to avoid running into problems down the road because figures were entered incorrectly or in the wrong location on the forms. Um, so we really encourage people you can actually go to Grow Brooklyn and see if you could set up an appointment with them for assistance. But there are free tax preparation services available all throughout the city. If you just type in the letters VITA on Google or any search engine, and then click the IRS link that is related to that, you should easily be able to pull up some free tax services within, I think you can dial it into a 1 mile range now. Before I think it was 5 miles, but it's very easy to find tax services, and we really would prefer if you don't know how to prepare that you have it prepared for you. Um, so the next thing I want to talk about is avoiding self-employment tax problems. So the way to, as you can imagine, just based on all the information that we've talked about so far, um, this is an area where a lot of people experience difficulty. They get mail from the IRS or New York State, letting them know that a couple years ago they did not include a certain item on a return, and now they're getting taxed for it. They don't understand why, and that's totally understandable. So now I'm glad you're here so you can learn some things about how to avoid surprises like that in the future. And one of the first things to do is just recognize as you're entering into really any economic activity, what that how that activity would be categorized by the IRS. So again, as Takia went through, there's different ways to tell whether what you're doing is going to be considered a standard employment relationship where the employer will be responsible for paying the certain taxes, or if you are in a self-employed relationship and you are then responsible for paying those taxes. Um, this a lot of this has to do with how much control the entity that you're dealing with has over the work that you're doing. So if you have a boss and your boss is telling you when to come to work, when to leave, how to do your job, how to treat the different customers, that sounds to me more like an employment relationship, where they would then be responsible for paying the Social Security and Medicare tax that we were talking about before. If you're making those decisions yourself, where you're deciding where you'll work, who your customers will be, how much you're going to charge them, if you're outlaying a lot of different expenses in association with the jobs that you're doing, like you're buying your own equipment or paying for your gas to get from here and there, that would tend to be more of a self-employment situation where you really want to be monitoring what's going on and tracking all the different expenses and preparing for the self-employment tax that would be assessed on that income. So again, I feel like I'm just echoing a lot of the great things that were said before me here. But what you would be doing then is making estimated quarterly tax payments um, throughout the course of the year, um, which should lower your bill at the end of the year, or possibly even completely eliminate it, and you might even be due a refund, depending on what your payments were looking like. Um, Also, please remember that you will be taxed on your income, not on your revenue. So I'm going to explain what that means in a minute. But in connection with that, please just remember to track and save your expense documentation so you can maximize your deductions and appropriately reduce your income and thereby reduce your tax bill. So we can go to the next example, or to the next slide. So when I'm talking about revenue versus income, revenue is really the amount of money. This is not a technical definition, but it's just a concept. So it's the amount of money that's flowing into your business or your self-employment situation. Um, but your income would be the amount of money that you keep after you've paid out all your different expenses. Like if you have subscriptions for something like I've worked with taxpayers who they have like an Adobe editing software subscription. That would be a deduction if it's used for the jobs that they're doing, like maybe they're a graphic designer or something. So here's an example here. Jan was paid $1,000 in February 2026, and her expenses were $250. So in that example, the revenue that Jan had for the period would be $1,000. Her expenses would be $250, and her income would be $750, which is the difference between the revenue and the expenses, or it's just the revenue minus the expenses. So we would then look at what her tax would be on the income, not on the revenue. So it's just important to keep that in mind going forward throughout the year. We can go to the next slide. Okay, so sometimes you're in a situation where you didn't know that you have self-employment income or really any kind of income that you weren't prepared to be taxed on. And you need some kind of way to resolve the issue. It could be for 2024 or even, an earlier year. Um, there's different ways that you can there's different ways that you can resolve the tax liability. The first one I'll talk about is this status that you can request with the IRS that's called currently non-collectible. What this does is it temporarily puts a pause on collection practices by the IRS. So if this is granted to you, you would be free from levy of your bank accounts, and other aggressive collection action that might take place if you're not engaging with the IRS to resolve your liability. The currently non-collectible status, the way you do that, the way you request that is you contact the IRS. You can really just call their collections line, which is usually provided on a notice that you would receive showing that you owe money. And you can provide to them information about your income, expenses, and or rather your assets. And after you go through that with the agent, they'll either let you know right away or you'll get a letter in a couple weeks, providing you with the disposition of that discussion. And hopefully, if you are in a bad situation temporarily, that you would get that relief. One thing to know is while the collection action will be paused, the debt will not be eliminated simply by going into this status, and it will continue to accrue interest. So you just have to be mindful of that. It doesn't make it go away, but it does give you some temporary relief. All right. We can go to the next slide. Okay, so if you are in a position to pay, you generally do not have to pay everything all at once. You can request an installment payment agreement. Um, the so Max actually spoke about the online account, and I really want to emphasize the importance of opening up an online account. You can request an installment payment agreement by calling up the IRS, but you really reduce your fees by setting it up for yourself online and setting up a direct debit installment agreement. So technically you can pay your an installment payment through a check or money order. Um, there's other payment methods that you can go through, but really the most efficient and cost-effective way would be through a direct debit installment agreement. If you're a low income taxpayer and you do the direct debit installment agreement, you should actually be able to completely eliminate the setup fees that are associated with setting up one of these agreements. We can go to the next slide. Okay, so the other way that you can resolve a liability with the IRS is through what's called an offer in compromise. This program is set up for you to resolve your debt because there's either a doubt as to collectability or a doubt as to liability. A doubt as to collectability means you cannot pay the amount because you just do not have the amount and you will not have the amount required um, during the time period that the IRS has to collect it. I'll give a little bit better explanation of that in a second, but the other way you can go through this program, the other main way is a doubt as to liability. What that means is somewhere along the line there was an error that caused a tax issue for you. You don't actually owe the tax because somebody made a mistake and you have erroneously been assessed this liability. If you have documentation to establish that, you can go through this offer and compromise program and resolve your debt that way. Um, but the data as to collectability, so what that is where the IRS will do what they'll do is they will look at what's called your reasonable collection potential. And what that is it's the amount that could reasonably be collected or reasonably be expected to be collected from a taxpayer during the time period that remains for the IRS to collect. So the IRS has generally 10 years to collect a debt from the date of the assessment. So they will look at your finances and they'll also look at your any other circumstances that you want to make them aware of. And if they determine that, okay, over the remaining amount of time that they have to collect this debt, depending on when it happened, it could be 6 years, it could be 9 years, it could only be 1 year. Um, if they look and see, okay, they're not going to be able to collect this money from you during the time they have left, they'll work a deal with you to resolve it for what they think you could pay, which could be nothing, or really, it would have to be at minimum $1, but it could be that's essentially, it's close to nothing. Um, but it could be for a lot less than what you would otherwise have to pay. Um, I do want to emphasize though that the minimum amount is $1. So the IRS they'll take a look at your financial circumstances. It's a holistic review. You'll typically have to provide bank statements for the past 3 months, um, and any other documentation you want to provide that would help and make your case to them that you shouldn't have to pay. Uh, if you have health circumstances, you can also provide documentation to that. You don't have to do that, but some people have medical bills, or they have ongoing expenses that they would need to pay a doctor or a therapist or something. And if that is your situation, you could supply that documentation to prove that uh, to pay the tax would jeopardize your health. And that would be something that they'll look at. So we can go to the next slide. Yeah. So one thing I want to say is if you do receive a notice from the IRS, it's going to be for most people, uh, it's not going to be a pleasant event to receive that, especially if it's saying that you owe money. But what you have to do is really just try to take it in a calm manner. So, don't panic, and definitely don't ignore it. Uh, Try to read it over carefully to understand exactly what it is that they're saying is the situation and why they're saying that you might owe some money. And take note of any deadlines that are on there because there are often deadlines that are set by a statute, which could, if you miss the deadline, then there's not anything you could do to obtain the relief that you might have been able to get had you done something before that deadline. And keep a copy of the notice. I'll mention again the online account. If you go through your online account, you should be able to download the notice in a PDF form onto your computer, or whatever device you're using. And then that way you can share it with a tax professional, such as me or someone else at a low-income taxpayer clinic or a volunteer income tax assistance center like Grow Brooklyn. And hopefully we would be able to assist you with that if you don't feel comfortable assisting it or doing it by yourself. Okay, so we'll go to the next slide. Yes. So this one is a slide for Grow Brooklyn, but I think the next one coming
Hi.
up. Okay, sorry.
Hi, no worries. Thank you so much, Charles. Thank you to all the senators Comrie and Mossad, as well as Assemblymember Hooks and Deputy Speaker Williams. Grow Brooklyn is here to provide free tax prep. We are one of the IRS-sponsored programs working on the VITA program, which is Volunteer Income Tax Assistance. Volunteer Income Tax Assistance program has been around for the IRS since 1972, I believe. And what it started out as IRS employees going out into their communities to provide free tax prep to community members. They since have partnered with a lot of agencies across the country. Grow Brooklyn is one of them to provide free tax prep to to our neighbors, our friends. So what's happened here, Grow Brooklyn, we have a number of tax sites that we partner with other nonprofit organizations to bring tax prep to different communities within Brooklyn and Queens. We also have what's called a self-employed tax prep program, which is a city-sponsored program that provides year-round assistance to small business owners, freelancers, gig workers, and the like. And you can make an appointment to join us for that. If you go to the next slide, please. Okay, so how to file your taxes with Grow Brooklyn. So we have several methods through which we can help you. We have first that you can do it yourself. That is through the Facilitated Self-Assistance Program or Assisted Self-Prep. What it is that you will reach out to us and request, hey, I'd like to file my taxes for free by myself. I don't need much help. And we will send you a link, which is from it's a grant from the IRS. They grant the software to us. If your income is less than $89,000, you can receive this link to file your taxes for free. Same goes for if you're active duty military with that same income guideline. We also have a full service virtual drop off or remote drop off. So basically, we have partnered with a national organization called Get Your Refund, and we offer a safe, guided filing experience. You create your account and you then upload your documents and follow the screen prompts. Grow Brooklyn team members will then we will retrieve your details and we will reach out to you if we need additional documentation, but we will start your tax return that day and communicate with you through the portal or through phone calls. Basically, you will let us know what you need and we will tell you what documentation you may need to provide to complete your tax return. Once your return is completed, we will turn your return back to you in the portal. And then we also have free tax prep at about 20 to 25 public locations in New York City. You would give us a call or you can call 311 and they will refer you to any of our locations. And we are a part of the New York City Free Tax Coalition. And basically, that, as Charles has mentioned, there's a number of VITA sites around the city. So you will get us, or you may get one of the other VITA programs. But you can definitely come to us. Just like them, we offer free professional filing. Next slide, please. So this is just a little map of our location. The one in yellow is sponsored by Senator Prasad, and that one that takes place on Saturdays and Sundays I should say select Saturdays and Sundays in her Canarsie office. But if you reach out, you can also find another office that we can provide you with that same quality service. Thank you.
Yes, so we have a low income taxpayer clinic, which is this is with Build Up Justice NYC. Um, whereas Grow Brooklyn might focus more on the preparation side of things, we will focus on what happens when you have already had your taxes prepared and then now you're facing a liability. Um, So we would assist with things like the currently non-collectible and the offer and compromise program that I was speaking about. We also represent taxpayers in United States Tax Court, and we really provide a variety of services to taxpayers. who are dealing with some kind of an IRS tax issue. Um, we can go to the next slide, I think. So in order to participate in the low income taxpayer clinic that we have, a person must be under the income limit, which is set by the federal poverty guidelines. It's 250% of that, of the limits, or sorry, of the federal poverty guidelines. So the limits are shown in that table. They've actually been updated very recently, so they're somewhat higher now. But even if you are not sure whether you would qualify, we would definitely encourage you to give us a call and we can speak with you about your tax issue. And if you are not able to participate for some reason, then we could at least give you some brief advice and counsel on the issue that you're facing. Um, we can go to the next slide. I do want to promote a drop-in tax table that we have, which is actually a virtual event. Um, so that's happening every other Thursday. You can scan that code there, to find out more about when the next one is, and then you can create a time slot for a tax professional to speak with you about your particular issue.
Thank you to all of our presenters. We are now in the Q&A portion of tonight's program. So if you have a question, please feel free to type it into that Q&A box on your screen. And if you prefer, you may also use the hand raise feature to ask your question verbally. I'll give us a few minutes to get your questions in. And just as a reminder, as you're maybe thinking of a question or typing your question in, I will be sending around a recording of tonight's webinar sometime next week, so that you can refer back to it if you like. I'll also be sending around a resource sheet with links and the contact information of everyone who presented today, so that you have that handy in case you want to reach out to any of us for help or advice. So far, I don't see any hands raised or questions in the chat, so I'm going to go ahead and assume we don't have any questions for now. But again, if something does arise, maybe you're processing this information and you have a question tonight or tomorrow, again, please feel free to reach out to us. Well, thank you again to all of our presenters, Max, Takia, Charles, Makila, for your presentations tonight, for such an informative webinar. Thank you again, everyone, for joining us. I hope you have a wonderful evening.